Welcome to Taking Stock on CNBC TV18, the show where we review the week gone by and prepare you for the next trading week. I'm Ekta Batra, and with me is Surbi Upadhyay. Hi, Surbi.
Hi, Ekta. Well, interesting week, shortened trading week thanks to the holy holiday, and also a little bit of a pause. I think that's what we got. So before we get to our conversation with Pramod in just a minute, let's quickly just rewind back and look at what the last 4 trading sessions really threw up. So as I said, really a week where bulls chose to pause. The rally took a bit of a breather, a bit of a halt, and perhaps a lot of people on the street will say it's not a bad thing because we had moved so swiftly. A 1,000-point rally is what we've got in the last 4 to 5 weeks. So if you look at the week gone by, then the Nifty has ended down. There's been consolidation. We're looking at about a 0.5% decline or a little under 0.5% decline on the Nifty. The mid-cap arena is where we are seeing some money come off the table. And a lot of stocks that had gone up very, very sharply, likes of Motherson, Sumi, etc. That's where profit taking is quite evident. The interesting aspect of trade this week was this huge interest in financials. Whether you had bank stocks, I mean, on the large cap side, or even the tier 2, tier 3 banks, there was just unbelievable amount of buying that came through. Friday, of course, was a different day, but nonetheless, the Bank Nifty has continued to outperform. It's a liquidity-driven rally. There is no taking away from that. We're getting 4-digit buy figures from foreign investors on a daily basis. That's taken the total tally for the month of March in excess of 26,000 crores. That's the gush that we're talking about. And of course, what we heard from the Federal Reserve this week perhaps is only substantiating one theory that this money tide should not ebb anytime soon because the Fed has turned very, very dovish. They're saying no rate hikes this year. They're in fact going to end their wind down of the balance sheet as well by September. So those were some of the talking points. Last but not the least, one conversation that at least I heard towards the end of the week, Ekta, was that this Friday sell down that we saw today, perhaps that's getting triggered by year-end factors because the 31st of March is not a working day, it's a Sunday. So the last day by which you have to close your accounts, settle down your books, your NAVs is going to be the 28th. So maybe some profit taking, some adjustments are beginning to happen before that.
Yes, and the election fever is rising as we speak. But nonetheless, I just want to talk about a couple of stocks which actually moved on a week-to-date basis. So we had Hindalco, Indiabulls, Housing Finance, Infosys, Reliance Industries, Yes Bank, Axis, HDFC Bank, all of these stocks which actually moved on a week-to-date basis. On the losing side, it was a lot about the auto stocks this time round. So for example, Maruti, Eicher, Hero, we've heard the managements, we've heard the inventory levels, all of that, which really came out in terms of a big story this week. All those stocks were in focus. HPCL, which saw profit booking in today's trade. Remember that Brent crude is at around 4-month highs. Z Entertainment also, which was a bit subdued. In terms of the broader markets, SpiceJet, Interglobe, both these stocks rallied anywhere over 20-odd% on a week-to-date basis. PNB, which was higher, Bank of India, Union Bank, so from the PSU banking space, Reliance Communication, worth mentioning in terms of the up move, though it's around a 5 rupee stock. On the downside, it was Jet, which lost out. We had Jubilant Life, which was down around 13-odd%, Motherson, Bharat Forge, Grew, which were a couple of other stocks which lost out. But as Surbi mentioned, joining us on the show to discuss the week gone by is Pramod Gubi, co-founder at Marcellus Investment Managers. Welcome to the show, Pramod. Well, let's start with what your view is. It's a bit of a breather that we've taken this week, but do you think that we're going to head towards all-time highs anytime soon, and by when?
Well, like you said, it's been a liquidity-driven rally, and liquidity-driven rallies are the hardest to predict, right, because there's no fundamental basis to it. And we did see about it, I think 30th of January was the last Fed policy meeting, and pretty much to the date you can see the turnaround in flows, not just for India. India, of course, took a breather during the border crisis, but the emerging markets have been in a roll since then. India's just caught up. So it's clearly money flowing from the Western central banks. And more so in terms of anticipation of the runoff ending in September. I think that's a much bigger deal than the no-rate hikes for 2019, because that clearly means a lot of liquidity will be available for financial markets, and I guess there's no limit to where it can take. But having said that, I think we're not on a clear footing that the liquidity will remain clear. I think it'll be data dependent. We are getting mixed signals. There are some data points coming from the Western economies that indeed things are slowing down, but at the same time, you can't have a 10-year run where so much of fiscal and monetary stimulus, and we are seeing a sustained slowdown. So I think it will be volatile through the year. There will be times when the Fed will have to take the other way around. I don't think they'll make a complete U-turn in taking a hawkish stance. But I think a neutralish liquidity scenario would mean that focus will come back to fundamentals, and that's when things will start getting interesting.
Okay, so now that's the global backdrop, and as of now, we've got the liquidity push, and I think no one in India is complaining. But Pramod, the other facet is elections, right? Because I increasingly keep hearing this viewpoint that this is a great pre-election buzz rally, and then you'll have a sell-on event, come the election result day, and perhaps that's when reality hits home. Look at autos, look at the slowdown. And that's when perhaps a lot of this starts fizzling out. Is that a view you share?
Well, in hindsight, you can ascribe this rally to a pre-election rally. In reality, I don't think it's got to do anything with the elections. Like I said, the emerging markets have been rallying in the last 2 months. I don't think China or Korea have much to do with our elections here. So to that extent, I think as long as the liquidity remains benign, we'll continue to rally. But you're right, fundamentals on the ground aren't particularly great. We've seen a slowdown in consumer demand, which has held up any sort of earnings trajectory in this economy for the last 3-4 years. That's coming off, led by autos and even other pockets of consumer discretionary. We've seen some sort of a slowdown. So unless and until we see a reversal of that, things should come back to normal once the liquidity dries up, whether it's on this side of the election or that side of the election. That side of the election more likely, because I think irrespective of which government comes to power, you will see some initial tightening of the fiscal deficit, and that'll have its own knock-on effect in terms of demand. So there will have to be other parts of the economy which will pick up, which have to pick up and drive a sustained recovery in the market if this were to continue, particularly if fiscal tightening sort of dampens consumer sentiment on the other side of elections. More interesting will be a revival of the Capex cycle, because if global liquidity is benign, we've also seen the RBI supporting in terms of interest rates. The interest rate environment is ripe for it. Certain industries are already looking high in terms of utilization levels. So a recovery in the Capex cycle can be the more sustainable driver of these markets, given that consumption, which is held up, is unlikely to support in terms of earnings, at least from a short-term perspective. Longer-term consumption remains the primary driver, given the demographics of this country and the sort of companies that we've built in this sector. But in the shorter term, I think for the rally to sustain, you will need a diversification of the market fundamentals, moving away from consumption only to the investment cycle.
So just to take that point forward, if the consumption story is intact from a longer term basis, is it an opportunity to buy auto stocks at these levels?
Well, autos are stocks which you will have to time. They're inherently cyclical in nature, and we have seen the cycle play out. I don't think there's any rush to buy for the longer-term investor who's willing to look beyond the next 3 years. I think it's as good a time to buy. But for those who like to time the markets, cyclical stocks, you're better off buying when capacity is at its peak, and the demand has been weak for a while. We've seen the auto demand slow down barely for a couple of quarters now. I think for those who would like to play it by the cycle, you would want to wait for a few more quarters of this slowdown to persist.
Okay, so wait for some time before you jump in on auto stocks. That's the advice. I'm going to go back to the point you made on this cyclical recovery, Capex. Because, Pramod, we've had so many false starts, right? Over the last 5 years, we've all been waiting for this elusive Capex recovery. What makes you optimistic this time? What are those telltale signs that you're seeing? Which parts of the economy? Is it industrials? Is it going to be road contractors? Where would you park money now?
Well, I'm not particularly bullish on it. What I'm saying is for the market to sustain its trajectory, upward trajectory, will need some of the other sectors to pick up the baton and continue demonstrating earnings growth, because earnings growth has been pretty much absent from these sectors. But yes, I think we've had a period of consumption growth, so certain sectors are looking fairly high in terms of utilization. It's about time that Capex happens, and typically in the period of 6 to 9 months ahead of any election, you will see freeze on Capex activity, because anybody who's spending tens if not hundreds of crores on a new project would like to see this key event to pass by and see any change in regime, any change in policy regime for those big Capex projects to be undertaken. So there'll be some sort of pent-up demand as well. So my sense is it won't be across the board Capex recovery. You will see some aspects of industrial goods picking up. Construction again can come back into the recurring, particularly if we see some sort of resolution to the real estate sector. And that's been a biggest driver of Capex activity in the past, particularly in the best cycle that we've seen between 2003 and 7. I think in fiscal year 2008, real estate alone contributed 50% to our gross fixed capital formation, and pretty much equal in terms of job creation. So that's central to any sustained Capex recovery, but we all know the problems in that sector. It's not going to go away anytime soon. So it will be...
Are you buying stocks there? I'm so tempted to ask because this week, real estate stocks were some of the top performers.
Well, I mean, we have a much longer horizon than a week. So, you know, we will at some stage look at it, but we're some time away from that.
Pramod, this liquidity gush that we've seen, which is really propelling and supporting our markets at these levels, do you think that it's hot money and that it can go out as fast as it's come in?
Well, possible. Most of the data points that we have access to suggest that much of this money has come through the ETF route rather than any sort of, you know, actively managed fund managers who are taking an active bet on India. So to that extent, you're right. It can be classified as hot money. ETF money these days comes in leverage mode. So every $1 coming into the market, actually, by the time it hits the market, it's $3. So on the way out, also, it'll be equally quick. But like I said, it is a fairly concerted effort across various central banks across the globe that we've seen that loosening, except for the Norwegian central bank, which hiked rates today. Most other global central banks have been on a loosening footing. So unless something dramatic happens in terms of the global data points, we don't see that reversing.
From a macro standpoint, we have Fitch, which in fact is predicting a sub 7% GDP growth for FY20. Are there chances, based on the kind of consumption statistics that we're seeing at this point, that the RBI could probably step on the accelerator and maybe do a 50 basis points in April?
Quite possible. I think the inflation has also remained fairly benign. So all those things are in favor of the RBI taking a more aggressive stance. But like I said, more than the interest rate itself, interest rates are already, fairly attractive enough for those who are undertaking Capex projects to begin. But I think there are other situations. One of them being, elections should be, behind them for people to pull the trigger on those projects. But lower interest rates certainly helps.
So Pramod, having heard what you've said over the last 10 odd minutes, you're talking about perhaps liquidity flows continuing to be benign, at least from foreign shores. You seem to be convinced that this is not just some maverick pre-election rally. Perhaps it has more legs. And you are positive, at least partially, on cyclicals. So does that mean that you believe that this market has more headroom, that we are perhaps in some stage of a bull run, but definitely a bull market?
Well, liquidity-driven markets are, like I said, the hardest to predict. So I wouldn't want to put my, money on where it is. I mean, the way we manage our funds are entirely fundamental basis. And like I said, some of these sectors fundamentally are looking at a slowdown, although structurally they are all well poised, particularly the consumption-driven sectors. All I'm suggesting is on the other side of elections, you might see some sort of clearer picture on the policy front.
What if elections disappoint? I mean, and we all know what market disappointment means. Is that going to derail the story then?
Well, I'm not sure. Based on the studies that we've undertaken, elections barely have any sort of lasting impact on the markets or the economic fundamentals. If you're talking about a week or two, a few percentage points here and there, of course, but it's never had a lasting impact. Most of the policy actions have been pretty much carried over from the previous dispensation to the new dispensation. So in the long run, we are not so worried about the election results. If at all, if there's an adverse reaction in some of the stocks on the basis of these election results, we might just add on to those positions. We'll be more opportunistic that way. But otherwise, I don't think one should read too much into these elections.
Okay. Pramod, one quick last question. This week has been signified, or the biggest thing which has happened this week is two deals. One deal which is still in the works, which is Jet. By the time we even complete the sentence, there could be some new development on it. So that's one particular space which I wanted your thoughts on. And the second one is with L&T and Mindtree. L&T is at close to fresh 52-week highs post the Mindtree stake buy. What are your thoughts on these two spaces?
Well, aviation, we have been fairly circumspect. I think it is a sector which has been notorious. We haven't seen too many winners, not just in India, across the globe. It is a tough industry to operate in. It's heavily cyclical, heavily Capex oriented, and dependent on the most notorious commodity on the planet, which is crude oil. So I don't think for a longer-term investor, it's easy to make a call on, when to buy, what to buy, really. So we tend to stay away from that, and generally recommend most investors to stay away from that. But the IT sector is quite interesting. I think this is not the first deal. Maybe the nature of the takeover is different, and it adds a bit of excitement to everybody concerned. But otherwise, I think IT is in such a stage in India where it's very attractive for strategic buyers. These are hugely cash-generative businesses, very little investments going in. So simply from the yield perspective itself, these are great businesses to buy and hold from long term. They may not be fast-growing. I guess from a structural perspective, anywhere between 10 and 15% growth is the best one can expect from these sectors. But like I said, the nature of the business is huge cash-generative, fairly stable demand, and very little Capex. So it's great from any buyer, be it a financial investor or a strategic investor.
Absolutely, and it's amazing how these companies have tirade over the whole issue of outsourcing, limited visas, etc. All that is a thing of the past. We've had a great rally. All right, thank you, Pramod, very much for dropping by and sharing thoughts with us on the market. We hope to connect with you again as we get closer to the election juggernaut. Right now, let's move forward and go across to our colleagues to understand the movers and shakers of the week. Sonal Bhutra is joining in with the leaders and laggards for the week gone by.
Well, I have more of leaders than laggards in my list. So let's start with the smaller list, the laggards first. Well, the auto sector, that continues to be under pressure, and the likes of Maruti Suzuki, TVS Motors, Eicher Motors and Hero MotoCorp saw declines of around 5 to 7% this week after the companies announced production cuts because of lower demand. On the other hand, Lupin also saw cuts of around 5% because one of its facility got an OAI from the US FDA. Remember, this particular facility accounts for 16 to 19% of the total US sales. That was about the laggards. Let's move on to the leaders then. The likes of Hindalco, Indiabulls Housing Finance, banking stocks like Yes Bank and Axis Bank did really well. Remember, Axis Bank also had an analyst meet, after which the stock saw a lot of upgrades from the brokerages. Moving on, the realty stocks, they were on fire this time around. The stocks like Prestige Estates, Brigade Enterprises, Godrej Properties up around 20 to 22% this week. This after the REIT IPO from Embassy got good response from the investors, and that is something that fueled some buying in these particular stocks. Some PSU banks also did well. The likes of OBC, PNB, Union Bank saw some good buying. And lastly, the aviation stock in focus again. SpiceJet and Indigo saw gains of around 10 to 20% in this week itself. This is because they did gain some market share in the monthly data that came out from DGCA, and also they are using some of the unused fleet by Jet, and that is getting transferred to these two companies. So loss of one is actually becoming a gain of other, and that's why all these stocks are buzzing in trade. Back to you.
Okay, all right, Sonal. Thanks very much for that. Now, Manglam is here with all the events that you need to watch out for in the coming week. Manglam.
We have a fair amount of events to watch out for all of next week. On March 25th, which is a Monday, we have Nirav Modi being produced in a London court. Remember, the diamond heir was arrested, and the stock impact on that could be a sentimental impact on Punjab National Bank. That is the stock that the street would keep on their radar. March 26th, we have a fair amount of board meetings, and State Bank of India, first up, will hold auctions of close to 2,600 crore worth non-performing assets. Let's see what sort of results those auctions bear. And Mindtree, remember the board had postponed the buyback meet to March 26th. They regroup again on Tuesday to reconsider the buyback decision and the amount. In light of the L&T open offer, this will be an important board meeting to track. We'll watch out for Allahabad Bank. The board meets out there as well. This one is to mull fundraising. On March 28th, which is the next Thursday, it is the March series expiry. Important day from a market perspective, given the sort of rally that we've seen in the March series. The more important point this expiry will be to see whether there is conviction levels that hold after this rally into the next month as well. The rollover data will be very, very important to track, especially given the sort of events that are lined up in April. We have the RBI policy meet, we have the fourth quarter results, and we get closer to the election dates. In fact, the first vote will be cast somewhere in the middle of April. So in light of all these events, let's see what sort of conviction the players have after this rally in March. That would be noted on March 28th when there is a settlement of the March series futures and options contract. Later in that day, we will also get the fourth quarter GDP data coming in from the US. The Fed recently lowered its growth guidance for the remainder of this year and for next year as well. So in light of lower growth guidance, let's see how the US economy performs. And come the last day of the trading week, which is March 29th, which is Friday, we have a new look for the Nifty, because the Nifty will have Britannia as its key constituent, which will replace Hindustan Petroleum, or HPCL as we know it. Have a good trading week.
Okay, all right. Thank you for that, Manglam. We'll take a quick break on that note. When we come back, we'll have Ashwini Gujral join in to talk technicals for the next week. Welcome back. You're with us on Taking Stock, and as promised, it is time to talk technicals, help you get set with a couple of trading ideas for the next week. We have Ashwini Gujral joining in. Ashwini, thanks for being with us on the show. First things first, this was a bit of a pause week. Friday was a day of profit taking. Does that deter you at all, or do you still think on the long side for next week?
Yeah, this week, A, truncated week, and B, you're coming off of a large week. So this week was expected to be a bit pace, but overall we held on to all of the gains. And the final day was interesting because it lightened up the market, and that means that there could be scope for further upside in the next week. So for the moment, people should continue to buy the dips and hope for higher and higher levels.
Okay, Ashwini, what is your strategy for next week and key levels you would be watching for?
Well, I'm interested in buying the Nifty, Bank Nifty, if we get further dips. And individual stocks, I think Balrampur Chini is a buy with a stop of 128, target of 140. Godrej Property is a buy with a stop of 830, target of 900. And JSPL is a buy with a stop of 162. Target of 174.
Okay, all right, Ashwini, thank you very much for getting us those trading tips. Well, with that, we are out of time on this edition of Taking Stock. As we take your leave, we'll leave you with some more market opinion, some voices that we gathered during the course of the week. Have a great weekend. We'll see you with the markets bright and early Monday morning.
We are experiencing a global bull market, and India is doing a very big catch-up. A lot of domestic people are very obsessed with elections and what is the BJP number, will Modi be, not be, etc., etc. But I think that is really the minor story. If someone came out and told you that we would have a border problem and we would have some sort of, action happening the way it did, and you will start seeing record FII flows, you will see the market rally, no one would believe you. But the market has a way of surprising. And I think the big story here is a big global catch-up rally that's happening in India. I feel that the Dow is very interestingly poised at just sub 26,000. If the Dow takes out this 26,000 level, it corrected a wee bit, but if it takes it out and does a credible breakout, I feel the Dow is going to a new lifetime high. Yes, we will see volatility due to elections. There can be multiple outcomes. It's not a binary option. There can be 4 or 5 outcomes if you really look at it, if you read politics. But the fact is that irrespective of that, the bigger thing, the bigger trend is what's happening to global markets. You will have short-term volatility, you will go through ups and downs, but I think that the bigger trend is global, or the scenario that I've been talking about. Yes. The fear was that US Fed would continue tightening. Yeah. And post those statements, the rally that you saw in the US was ferocious. And along with that, very often US may rally, but EMs don't rally, like we saw in last year. But the beauty is that I feel the EM market has made a higher bottom, higher top. It's made a reversal.
I think a lot really depends on the outcome of the general election. And the mood that I saw in Asia last week was that if the BJP/the NDA were to come back into power, that would be, I think the rally would continue even more strongly.
There is a lot of money coming into the emerging markets, given that dollar is definitely getting a little weaker. Domestically, I think we are getting a little bit more positive from news flows on the election verdict, the direction of that, and continuity of policies. So these are, bringing in good times for markets across the board. I would believe that there is a lot of money to be made across the market. So I wouldn't like to choose a large cap or a mid cap or vice versa. I think there are pockets of cyclical sectors where huge valuation comfort is there, and probably the bottom has been made in the last couple of months there.